Well, thanks, Lorraine, for that very flattering introduction. I feel very humble. And indeed, it is a great honour to be here at the Melbourne Mining Club. I know it's a distinguished honour, and I'm very thankful to the Mining Club board for this invitation. I'd also like to acknowledge the presence of Sir Avi Parvo, the patron of the Mining Club, and indeed an icon of the industry for so many years. I'm excited to share with you some of the highlights of OceanaGold's story and discuss why we believe that there's plenty of room left in the precious metals market, particularly for companies that are looking to grow and expand their reach into international markets. And I'd also like to touch on what I believe is the mining industry can do to meet some of the immediate and longer-term challenges facing our industry. I know I wasn't supposed to talk about OceanaGold. You're supposed to give, broad industry themes at these things, but I can't help myself, so I'm sorry about that. So our story is about having a vision and delivering on it. This year, 2015, has been a very exciting year for us, having doubled the size of the company and extended our reach into North America where, let's face it, that's where all the money is. And for a long time now, we've been upfront with the market about our objective to grow our business through accretive acquisitions that align with our vision of being a mid-tier multinational gold producer. While M&A has been a clear target, we were also very cautious and discerning about the kind of projects or operating assets we were willing to consider. And we reviewed a large number of potential projects with an understanding that all acquisitions come with a degree of risk. But we were committed to learn from those before us, understanding that no move is sometimes better than a bad one. In April, we made an investment very close to home, announcing our intention to acquire the Waihi operation in New Zealand from Newmont. Now, this mine, many of you would know, is about 150 kilometres from Auckland, in the township which shares the name, which has the meaning of gushing water in Maori language. It's operated since 1988 as an open pit, so 27 years, and since 2005 as an underground operation as well. But its history goes back to 1888. And in fact, there was over 4 million ounces mined by the old-timers during that period. Very interestingly, Waihi was the site of the first use of cyanide for commercial extraction of gold in the world. So it's appropriate for us as an innovative company to be the owner of this operation. But it also created a very clear value proposition for us and a strong strategic fit because we're already in New Zealand. We know the country very well. It's a good jurisdiction, albeit a little bit bureaucratic, and I hear so much about the All Blacks. It drives me nuts. It does help productivity, though, when they win the World Cup, I have to say. So we were the biggest gold miner there, and it was appropriate that we should be the natural owner of Waihi. The operation itself is low cost, and it came with a very experienced team from the Newmont camp. And most importantly, it's got very prospective geology, and that convinced us that there's great potential at Waihi to extend the mine life far beyond the current reserve estimates. It also reaffirmed our commitment to our New Zealand business, which has been seeing a renaissance of late with the declining New Zealand dollar and lower fuel prices, which are driving down our costs. And whilst our New Zealand business has not received the recognition it deserves, we spent a lot of effort and time optimising our operations to ensure that they withstand the movements in the gold price as we're currently experiencing. Last weekend we celebrated the 25th anniversary of the Macraes gold mine, and this is a mine that's been in continuous operation since that time, and many of you have been there and worked there. It started with a 7-year mine life. It operated all through the 90s when gold was $250, $300 an ounce. It's low grade, it's refractory, it's got a high strip ratio. It couldn't get much tougher, but because of that environment, there's been a culture and a DNA developed at that site which now exists within Oceana with the people there that has managed to keep that going as a cash positive business even today. So it's a wonderful foundation for our company, and it's that DNA which has set us up for the future. So we're in a bearish market and there's a pessimistic outlook on gold this year still, but it's created more opportunities for us. And these opportunities are getting more of a higher quality, and they're in a number of very attractive jurisdictions. So this, in essence, is a great time to be building great mining companies. We opened an office in Vancouver in mid-2014 because we have a very strong following in the US and Canada, which has seen our share register dominated by US-based international investors. We're very interested in exploring further growth opportunities in America. So we purchased 25 million shares in a gold exploration company called Gold Standard Ventures and acquired 15% of that company. That Gold Standard Ventures owns the Railroad Pinion Gold Project, located in, many of you would know, Elephant Country in the Carlin Trend in Nevada, one of the world's best endowed gold belts. So these opportunities do exist, even for relatively small companies like ours. But after announcing Waihi and the Gold Standard Ventures purchase, we made a larger investment into another high-quality project, which I was very proud to get over the line, called the Hale Gold Mine, owned by a small company called Ramaco Minerals. It's in South Carolina, in the prodigious Carolina Slate Belt, and I would hazard a guess that 90% of the people in this world didn't even know it existed. I didn't until 12 months ago. It runs for 400 kilometres over 5 states from Georgia to Virginia. And the mine itself is located on the site of an old mine that operated from 1898 to 1908, when the boiler blew up and killed 2 people, and they shut the mine down. And it's in a region where the first American gold rush occurred in 1799, 50 years before the San Francisco gold rush. When I say that to most Americans, they don't even realise that it was the case. The Hale team successfully acquired the property on which the project stands in 2007. They met all the regulatory approvals, including extensive public consultation and environmental assessment processes. Now that's a great achievement by any measure when you consider that it was done in the United States, where the regulatory approval process is very rigorous and complex and comprises many powerful lobbies and interest groups. So this acquisition of Hale is truly transformational for OceanaGold. We are now the proud owners of the only gold mine east of the Mississippi, in what is a dormant gold region that has not had 1 ounce produced for 16 years. Not only is it fully permitted and well into construction and fully financed, by combining Ramaco Minerals with Oceana, we've created a sector-leading low-cost intermediate gold producer, which is the envy of the industry. In 2017, when Hale commences commercial production, we expect to produce 600,000 ounces of gold as a group at an all-in cost of $600, as Lorraine mentioned. So undeniably, in our view, Hale represented one of the highest quality development assets owned by a junior anywhere in the world today. So these opportunities do exist. When we think forward about the market, I strongly believe that the current market, despite its volatility and negative sentiment towards gold, also presents significant opportunities for companies ready to seize them. But seizing them requires going against the pack. Building a strong mining company in times of weak demand and particularly weak confidence requires swimming upstream when others are floating downstream just trying to stay alive. The current state of the gold price weakness will only serve to make strong companies stronger and encourage further consolidation in the market. And in the short and medium term, we will continue to face headwinds, at least for the gold sector, I'm afraid to say, as the US economy recovers and an increase in interest rates in the United States becomes a matter of when rather than if. With the current gold price at $10.50 US, gold is likely to bounce along the bottom for some time to come, challenging gold producers along the way. But the cycle will turn, as we all know in this room, as inevitably it always does, and the strong driver for future price growth will be the growing middle classes in China, India and Russia, and the growing appetite by many countries to increase their gold reserves held in central banks. The lower gold price has increased the physical demand for gold in these countries, and despite the questions regarding Chinese economic health, the southern and eastern parts of China are still growing strongly, and the demand for gold and their gold reserves will only continue to grow. It is also a fact that there have been no new major discoveries in the recent decade, and governments are often late in approving exploration permits prior to the peak in the cycle. So many solid companies, as we've experienced, whether they're forced or desire to, are selling or combining quality assets. So these opportunities may also be beyond our borders. And as a relatively small company, we now have operations in 3 countries around the Pacific Rim and a head office proudly here in Melbourne. I'm often asked whether we would look to invest in Australia, and my answer is that you simply have to go where the gold is. The reality is for us that while Australia is mineral rich and has very low sovereign risk, arguably, this is a very competitive space, so often you have to be prepared to go into new countries and seek untried opportunities that perhaps present better value. Even with the projects that currently appear difficult, whether for technological, social or regulatory reasons, my view is that good ore bodies will always get built. It just might take some time to get there. So on that subject of greenfield project development, I thought I might share a few memoirs of my fortunate career in developing projects. I've spent most of my career developing greenfield mining projects, including 2 at OceanaGold, Didipio and now Hale, and previously Prominent Hill and Sepon for Oceana. All have had their unique challenges and all have had arguably been a great success, with, of course, the exception of Hale, which we fully expect will be another raging success. However, they all have one thing in common: good grade. I believe in an adage that a former chief mining engineer and mining statesman of the time, Kit Clifford, once told a group of us young green mining graduates in Mount Isa in the early 80s, there are 3 important things in mining: grade, grade and grade. Now, I've followed that fundamental philosophy in mining ever since. Sepon and Didipio also have something else in common. They were both unloved, either by their owners or the share market. The Didipio development has been a particularly pleasing one for me. Before it was built, it was regarded by nearly everyone I spoke to as the project that cannot be built. The market gave us 0 value for it, and investors would roll their eyes when I told them in 2011 that we were going to bring it into production at the end of 2012. I dare say there are many people in this room who are in that camp. but it was our laser-like focus on bridging the cultural gap between modern Western mining business and the community at Didipio, and to gain their trust, that led to this great mine becoming a reality today. It really boils down to one very simple principle: respect. Respect for local community, respect their culture, their beliefs, their ambitions and their dreams. Respect for the differences between us, and getting people on your team who get it. Didipio is now a $1 billion asset, depending on which analyst you talk to, and that's what I call value creation. And Sepon was, however, the most satisfying development I've been involved with, not because of the opportunity to be part of a team that similarly created so much value, but because we created billions of dollars of value for shareholders and the people of Laos alike. By the end of 2013, after just 10 years of production, Sepon has paid approximately $1.5 billion in taxes, royalties and dividends to the Lao government, not to mention the many billions of dollars added to the Lao economy indirectly. For many of those years since its development in 2002, Sepon has contributed around 15% of the GDP of the country per annum. That one mine is making a huge difference to the people of the 5th poorest country in the world, and a fantastic example of how mining not only creates value, but turns mineral resource capital into human capital. And Oceana paid Rio Tinto a mere $20 million for 80% of this undeveloped asset, and then $80 million for the remaining 20% later, after we had the initial gold mine in production. And it was so satisfying to be part of this. That project created a mining company in Oceana that I believe was truly ahead of its time. I like to think that we are following on from that legacy today with the modernisation and growth of OceanaGold, creating companies whose people embrace the values we stand for, find real meaning in what they're doing, and thoroughly enjoy the experience of doing something good together as a team. Following Sepon, I was asked to do a repeat performance in the deserts of South Australia in Prominent Hill. So this in many ways was worlds away from the challenges of Sepon, being in the South Australian desert, where getting water was the biggest issue, compared to Laos, where you would sometimes get 20 inches in a day in the wet season. But we chose to use the same principles of focusing on community engagement that we developed at Sepon. One great example of this was the highly successful pre-employment training program. In this program, we focused on the long-term unemployed and people in remote parts of unemployed people in the remote parts of South Australia who had never had a job before, and 80% of them were Indigenous. It was teaching them life skills along with the basic skills to work on a mine site. And if these trainees completed the 3-month course, they were automatically given a job, and the success rate, I'm pleased to say, for trainees starting work at Prominent Hill was around 85%. But it was much more than just training the trainees. It was also mandatory that every worker on site in the operations went through a 2-day course on understanding local Aboriginal culture. And that created a culture of respect within the operation, where Aboriginal employees and other people from the pre-employment training program felt welcome, and people who didn't get it didn't stay. So within 2 years of start-up at Prominent Hill, we had about 100 Indigenous employees, or about 10% of the workforce, and most importantly, a 90% retention rate. So that leads me on to the topic of social performance and community expectations. The mining industry faces increased pressures from citizens, communities, NGOs and even investors. Our world is changing quickly, and so too are the expectations of society. As an industry, we are very often operating in the front lines of some of the hardest issues in society, including globalisation, poverty, racism, gender diversity and climate change. And I've always argued that good corporate citizenship and responsible modern mining are just as important as operational and financial performance. The people who most oppose mining appear to blindly separate the production of minerals with the realities of modern life, which we all know is completely reliant on the mining industry. I would argue that while opponents and other industry critics and even local communities understand the intellectual argument around the need for minerals in society, in many cases they are no longer prepared to accept the risks to the safety of the miners at the face or the potential impacts of the natural environment, particularly if they don't feel the benefit. The community is expecting and indeed demanding higher standards of health, safety and environmental performance and community engagement. And further, higher expectations by society will continue to shape our future industry. But I think this is a good thing, and we as an industry should embrace the challenge. At Oceana, we've worked hard to embed the principles of sustainability into the spirit of partnership in everything we do. At Didipio, we work with local community leaders to establish an independent community-run business called D Corp, which provides a range of services from catering to concentrate transport. We've supported them in developing new business opportunities beyond the mine, and their success has been phenomenal. In keeping with this theme of offering tools and opportunities to let individuals forge their own futures, we have heavily invested in community education and training. And this year, in September, I was very proudly there to launch the OceanaGold underground training facility in the Philippines, which to my knowledge is the first simulated hard rock training facility in the world. This facility is a partnership between the company and Site Skills Training and features Asia's first underground mining simulator. It's a $2 million investment. The facility and the Competency Through Learning program will deliver nationally accredited training to local residents who are committed to a career in the mining industry. And our objective is to build a brand locally and internationally as a strong, high-quality mining organisation which offers exciting opportunities for our people and rewards success. My mantra is good people work for good companies, good suppliers and contractors work with good companies, and responsible governments will always want good companies to conduct mining in their state. So the challenges ahead, however, despite the good things we are aspiring for, I believe mining is regarded by the public as an old industry. We need to address this by seeking to gain more from innovation and technology and get into the 21st century. Our stakeholders demand more from our safety and environmental management performance, as they should. As new technologies replace those before them, community expectations will also continue to rise. And I believe we have fallen behind the fast-changing world and need to step up. I would challenge you to imagine a future where some of the highest risk activities in mining are eliminated by investing in technology to improve safety and environmental performance. This means we must remain forward-looking and invest in innovation, which is an increasingly common theme in many global forums. And by addressing safety and environmental challenges through low-cost innovation, we can get uptake from our employees and business leaders alike, which will likely lead to productivity and commercial improvements. It means stepping into the future, accepting the challenge, and not be looking to the past and assessing how far we have come. Mr. Chairman, thank you once again for the opportunity to share my story and some of my thoughts with you today. I'll be very happy to answer questions. Thank you.
Stand 1 second. We've got a couple of roving microphones in the room. Gavin's at the back, Richard Shoddy over here. So if you've got a question, please wave frantically at the microphone. Stand up, state your name and affiliation, and ask your question. Who have we got? Up the back.
Mike, Bruce Purcell from Royal Car Resources. Thank you for your address and relating your success story. It is truly a success story that's unfolding. I commend you especially for your efforts in the Philippines, and they seem to me, as an exploration geologist, to be an anomaly because you are successfully mining a very viable deposit, but there are many other companies attempting to do the same that are frustrated by the political situation. Can you share with us what your innovative secret is to achieve that end?
Thanks, Bruce. Well, there is no secret. Persistence and integrity are the two keys. I only came along at the back end to build the mine 5 years ago. The company has been in the Philippines now in various forms for 25 years, and so it's built significant infrastructure on the ground in terms of people and relationships that allowed it to navigate the very rocky road to development. So it's been a long journey, but we've proved that it can be done. As far as the current administration goes, it has been extremely difficult the last 5.5 years to get anything done in the Philippines if you haven't got a permit. We had a permit and we proceeded to build the mine on that basis. But I would encourage you to persist because the Philippines is a great country, heavily endowed with copper and gold. It's got good people, highly educated workforce, good skills, and with the right government, it'll go places.
Gilbert Ralph retired with a bent on history, and I enjoyed what you said, and it's obvious that you have a sentimental attachment to Wāhi. I'd like to mention that that was the birthplace of Eric Rudd, who later became Professor Eric Rudd, a Professor of Economic Geology at the Adelaide University. The other thing that touched my memory was that in 1913 they installed a Ward-Leonard electric winder that was built by Siemens in Germany. This subsequently was bought by Western Mining Corporation in the 1950s and was installed at the Navoria gold mine in Western Australia, where Saravi had his beginnings as underground manager. And subsequently it was transferred to Kambalda on the Silver Lake shaft, and that winder, to my knowledge, is still there, but it was at Kambalda, the first nickel development underground mine in Australia. That's just a historical note which you can add to your speech if you wish.
So I'm a chemical engineering student at RMIT, John Huynh. And Mick, you spoke a lot about your mine development and operations and how the success is really driven by gaining the trust of the community, the community relations, and also the respect. So in light of that, the real test of community relations is when you have to close down a mine. So can you map out a strategy of how a company can best exit a project and still leave with the goodwill of the local community? This is important in gaining the trust of the next community that you go to develop the mine.
Yeah, thanks for that question. It's an excellent question. We often forget about the full cycle of mining, and we are actually in the process of putting one of our operations in New Zealand into care and maintenance. It's called Reefton. It goes into care and maintenance to the end of this year. Reefton is another historic story for you. Reefton was the first town in the southern hemisphere to have electric light. It's a town of 1,500 people. It's called Reefton, as in Reef Town, Gold Reef Town. It was a gold mining epicentre of New Zealand in the late 1800s. And the town has been thriving since the mine was opened in 2007 under OceanaGold. And now we've run out of reserves, so it's come to a close at the end of this year, and obviously a big impact on the community. But what we did was we were very honest with ourselves and with the community, and we said, gold prices dropped 25%. We can't keep investing in this. So 2 years ago, we told the community that it was going to shut in the end of 2015. So that, being open and honest and with the community and the workforce, gave them an opportunity to plan their lives. There's also the opportunity, it's not about closing the mine, it's creating a legacy. So we are doing our very best to create world's best practice in rehabilitation of the mine site so that we can point to that mine in the future to other governments, if we happen to have the opportunity, as saying, not only do we open them and operate them well, but we close them well also. So we have to leave that legacy, and that is that's really an opportunity. Reefton is unique not just because of the community, which relies on the mine, but also because it's inside a conservation park in New Zealand. So it's something special indeed. The good news is that since we've laid off all of our mining workforce, they've all got jobs. There's 60-odd alluvial shows on the west coast of New Zealand, 4 or 5 man shows, and these people who have been trained up in proper procedures around safety and operations of heavy equipment have been sought after by these smaller companies. So there is hope, but I think that the nub of the answer to your question is transparency.
Mick, one last question over here.
Thank you. Thanks for your address this afternoon. It's very enlightening to see a successful career. Peter Taylor from NWR Communications, and we look after a number of small mining companies. Given, as you say, your register is very heavily endowed with American investors, I'd just be interested in your comments on their appetite for gold mining companies in this testing environment.
The US is an extremely large market, and it makes the Australian market looks like a real minnow. And because it's so large, you have a wide range of investors, from your entrepreneurial, high-risk-taking investors through to your more conservative, I think they call them pension funds over there. But even they invest in different sectors across the spectrum, from industrial stocks through to gold stocks and oil and gas and in real estate and all sorts of things. So they want to have a big spread of investments. So in this market, they're still looking for gold, but they will look for the high-quality investments where they are pretty confident they're not going to lose their money. So whilst they won't invest in everything in gold, they will invest in high-quality gold. The other thing about the US is they don't follow the trend, they set the trend. And so when you see generalists in the US starting to buy gold stocks, it's because they think the market, it's starting to turn, and they're always in there first. So I think that's one of the reasons we're over there, is because there's so much money available and there's so many different markets that you can choose from. It's not just one. The Australian market is heavily, heavily biased towards the superannuation industry, which makes it very difficult for the entrepreneurial dollar, like gold at the moment.